Hi everyone, today we're talking about Kohl stock, and we're going to talk about if Kohl stock's a buy. Kohl's is a department store which has over 1,000 locations, and over the last few years they've been hurt by a lot of the online retail boom that's been going on, and a company called Amazon, they've hurt Kohl's quite a bit. What we're going to talk about now is Kohl's in a position to go buy their stock. Now Kohl's had a pretty bad Q3, and we'll get into the Q3 in a little bit and what's going on with the stock. But when we take a look at the stock chart, obviously we can see that it's on a bit of a decline. It's now trading at $46. It's down about 32% year to date. It is at a PE of 10, which is worth saying that it's not exactly a massive low PE for Kohl's, because it's never traded at a very high PE. It tends to not go over a 15p ratio. And the big standout thing, and I think the thing that kind of pulls people in, is because it's discounted and it pays a dividend. That means the dividend yield has shot up to 5.82%. So is that now a standout dividend that's worth going and investing in? Now, with Kohl's, what's going to happen is we're going to talk about some good points for Kohl's and some bad points for Kohl's, and then we'll get on to my conclusion at the end of the video. So obviously Kohl's is struggling because of the rise of online retail sales. But when we look at what they're trying to do to try and battle away with that, Kohl's has identified what we're going to do is we're going to start making some partnerships with other companies. Now, the main company that's causing a lot of problems is Amazon, which is a new partnership which they have created with Amazon. At first, this partnership has seemed to, it got a good kind of feedback and that it was going to be a good thing. We had the first earnings report after having that partnership with Amazon. And the whole idea with this partnership is that if you buy something from Amazon, you are able to go to Kohl's and you can return it, and it's convenient for the customers. And when they're in there, it increases the foot traffic into the stores, and then you go buy some things from Kohl's. Now, judging by the earnings report, it looks like it hasn't been the best success so far, and it has got a little bit of negative press since the earnings report. But I have put it into a good point because they are trying to change what's happening with the company, because they need to change what's going on. If they don't change what's going on and they keep pulling out quarters like this, we won't have Kohl's around for too much longer. So it seems like they are trying to change things around in the right way. So that's one of the partnerships. The other partnership is Aldi. Obviously, Aldi is a massive growing supermarket, which is trying to get to the third biggest supermarket in the world by 2020, and giving some more of their store space to Aldi, and then kind of like saying, oh, you can do your supermarket shopping and do this, is another way. They're also trying to go and focus on the health and fitness sector and trying to have few people come into the stores for that by having Weight Watchers products, and also he's trying to have some Planet Fitness gyms in the stores. Now, obviously, this seems like 4 big things that are going on with the company, and I've put them in good points because they are trying to tackle the situation with the bad revenue, the flatline revenue, the declining revenue, and the EPS. One thing they've got to be careful of, though, is they've got to make sure these things succeed. So it looks at the moment, how's the Amazon thing going to do? Obviously, Christmas will be the big one, the Q4 running. So how tracking this and seeing actually how much does it increase the foot traffic into the store that convert into sales will be a really interesting one. At the moment, it'll be worth reviewing it into a year to see what happens with this thing, but it looks like at least management are trying to tackle the situation of not having good revenue and EPS by having a lot more services in their stores. Now, obviously, the other good point is the dividend. Obviously, look at the dividend. It's a very high dividend, nearly a 6% dividend. We'll talk about if it's able for them to continue paying it in a little bit, but obviously that stands out as a really good dividend, and they've paid that, I think, for about 9 years, and they also have a history of increasing the dividend. Potentially, we'll see what happens with the dividend. But at the moment, the dividend is probably one of the main reasons why you would get into this stock at these prices. Now, there is some bad points. And like I say, some people would argue about these partnerships. Probably could be potentially some bad points for the store. Obviously, you got to question the management side of it as well, how they're going to develop it. But like I say, I think I'll leave that one for another year's time, and maybe come back to the stock in a year and see how this has happened. But obviously, the revenue and EPS is a bad point of the company. And at the moment, the revenue and EPS is flatlining. The sales are flatlining. They're even coming a little bit negative in some quarters, which isn't great. So it'll be tempting to see what happens with how they're handling this and if they can change this around. The outlook got cut in for Q4 and Q3, which also sent the stock down massive. We talk about this all the time. When a stock comes out on earnings and then it goes, oh, by the way, Q4 isn't going to be that good, the stock gets slammed. And when Kohl's did their energy part. That's exactly what happened with the stock. So it's not looking good at the moment, and the PE, normally when we get into a stock like this where it's been hurt by a lot of competition and the EPS and revenue is starting to go negative and flatline, normally stock gets hit quite hard and the P normally goes to quite its lows that it's ever been at. When we look at Kohl's, their P history, 10 is actually about in line. It's like in the middle. It's not high. It's not the lowest. So I think that kind of sends to me that maybe this stock can be discounted a little bit more than what it already is, because that is, for the problems it has going on, it should be probably trading at kind of like the lowest P it should be at right now. So that's something that stands out to me. And the last point is obviously the dividend, and the dividend not being safe. And obviously this dividend is probably one of the main reasons why you would invest in the company. And while the revenue and EPS kind of, if it carries on declining at the rate it has done last year, then especially the EPS side of it, because I think that declined nearly 14%. If that EPS keeps on going at that rate, there's going to be questions over the dividend and if they're able to pay it. So in 2 years' time, if it carries on how it's doing right now, this dividend could be cut slightly. So we'll see what happens there, but that's something to be careful of, because unless this EPS and revenue changes, the dividend is going to be slightly at risk. And obviously I think that's probably the most reason why most people get into this stock going forward. Now, I've not put anything about the balance sheet because the balance sheet was kind of like okay in the middle. Also, insiders trading, there was no one buying the stock, there was no one selling the stock, so I can't put that anywhere for a good or bad point overall. You would kind of feel like people would probably buy the stock if they thought it was cheap, so maybe you could put it in a bad point for that reason. But overall, my kind of opinion with the stock is that when I look at it, I am slightly worried because I would get into the stock for the dividend. The dividend's not safe until we see how management change that EPS around, how they're going to change that revenue around, and until then, the dividend's going to be a little bit risky for me. Also, if we have the EPS and revenue, if that starts growing at a 3 or 4% rate, what we'll see there is we'll start seeing the stock price go up and also the dividend still going up as well. And that's when, if I get into a dividend stock, I like to know the dividend's safe, and I also like to know the share price will go up a little bit as well and not carry on going down. And when I look at Kohl's at the moment, until the management changes how the EPS and revenue goes up, for me, I can't get in that stock because the dividend doesn't look too safe. And also, I don't think the stock price is going to go up from here. If anything, I think it could go down at the moment until we see some sort of success with these kind of game plan of how we're going to turn it around. And I think as well, Kohl's at the moment needs to just get some sort of identity and try and, come masters in kind of one area and decide what they want to sell and decide what they want to do. And until that happens at the moment, I'm going to stay away from the stock. And like I say, I might review it in a year and see how successful kind of these partnerships were. But at the moment, for me, guys, I'm going to have to give Kohl's a miss. So, guys, that's me talk about Kohl stock. I hope you enjoyed the video. If you could give it a like, that'd be amazing. Subscribe if you haven't. We'll try to get to 1,000 subscribers by Christmas. That would be absolutely amazing. And I'll see you in the next video.